This will help. It's early. It is the 13th of November already, and 5 a.m. Eastern Standard Time. What we're going to talk about today are obviously swing trading today, as well as some headlines off of ZeroHedge.com. And then, of course, we will talk about economic data and the pre-market activity. Let's give those who are non-members an update of where we are at this week. We went into the week somewhat still bullish on the market, but still very, very concerned. I had been predicting months ago, while we were trading down several percentage points lower than where we are right now, I said we're breaking out to new highs. The reason being is that we saw the U.S. elections coming up and the fact that the powers that be were going to goose the economy, and they certainly have done that. So the question is, what's next? I'm typing good morning here to everybody. Okay. And the other point I wanted to make was that while I am or was bullish on the market, and still tentatively bullish, I guess you could say, it was for all the wrong reasons. I believe that we were going to press higher in the market while the economic data in the economy, the global economy for that matter, was falling apart. Hey, good morning, John. And I'm going to go over some charts because I discussed with members last night on Market Wrap that the daily charts of the market were concerning. I was concerned going into the week about the consumer discretionary stocks, which, using the XLY, and I'll go over that chart, using the XLY, have not broken out to validate the breakout on the S&P 500. We have breadth concerns, meaning we have too few stocks driving this market up higher. That makes it susceptible to a sell-off. So we opened up positions on Cure, which is a leveraged ETF putting you long of healthcare, as well as the LABU, which is a biotech leveraged ETF. They each spiked higher yesterday. Good morning, Trent. They each spiked higher yesterday, and we scalped those profits. And it looks as though, looking at the futures this morning, it was the wise move to make. So before we get to the charts of the morning and the economic data, if I could ask you just to please, if you watch us on YouTube, hit that like button. I think I'm at just shy of 1,600. I need one more subscriber on YouTube to make it to 1,600. We're growing fast, and that's pretty cool. So if I could ask you to click the subscribe button. Good morning, Steve. And click the like button. Share with a friend. Also, it really helps with the YouTube algorithm. And if you're watching us on Twitter, please follow me there and retweet to a friend. And let's get to the headlines that we are focusing on this morning. And we'll come back to the pre-market futures. Now, again, it is 5:03 in the a.m., very early. But today is really a game changer in terms of headline news. We have CPI, which comes out this morning. That's the consumer price index. That's the measure of inflation at the consumer level. Also, at 11 a.m., we have Jay Powell, who will testify. Household debt, you know that's going through the roof. And the federal budget, no big deal there. That's just going to go higher. All eyes are going to be on Jay Powell and what he has to say. That should be interesting. Now, moving on to the back half of the week, we have the producer price index. That's the measure of inflation at the producer level. We have more Fed heads out there: Charles Evans, Clarita, Bullard, Williams, and again, Jay Powell. All these guys are going to be out there yapping it up. A lot of headline risk out there. And then, of course, on Friday, retail sales, the Empire Manufacturing Survey, and industrial production, capacity utilization, business inventories. Watch for a rise in business inventories, especially as we move into the Christmas season. I don't know whether or not this is seasonally adjusted. It should be. We'll be interested in seeing whether or not we have a rise in business inventories. Why does that matter? If you see a rise inflation, seasonally adjusted in business inventories, it could imply that you're seeing backlogs at the wholesale level building, and that means that discounters will have to come in for the Christmas season and cut prices to clear out that inventory. So that's not necessarily a good thing. A draw in wholesale in inventories would be a good thing. However, it could be inflationary. So more to come as we roll out the remainder of the week. I will not be recording on Friday morning. I'll be on the road. Moving on to why won't you let me out of here? Here we go. Moving on to the headlines. It's really been a quiet week in terms of headlines of late. But what I really want to talk about is, again, the technicals of the market look good. Were I long, I would probably stay long. But I can't ignore certain factors. One, volume is just absolutely horrible. Two, this is off of Zero Hedge, and I'll pop the URL into the, well, it was going to. Here we go. I'm going to pop this into if you want to read it at your leisure. I'm just going to go over the highlights, and it really has to do with a tremendous amount of greed. You're seeing the greed indicator very, very high. It hasn't been this high since before last year when we began to roll over on this market. I don't want to spend too much time here on this particular one. What I really want to focus on where is it? Offshore one. I want to focus on breadth, and I could have sworn there was a chart here for breadth. All right, maybe I deleted that. Cyclical stocks, most shorted stocks. The fun of being live. All right, so we can go to McClellan Oscillator. You can see that there's a flashing divergence here with the McClellan Oscillator putting in lower highs and now lower lows while the S&P 500 trends higher. Also, you had yesterday we'll come back to copper because it's pretty interesting. You had the VIX which had broken out on the 11th, pulled back, did a retest of support yesterday, and it appears as though we are setting up for a move higher on the VIX. Now, we did sell off the highs of the session yesterday, but it's something to watch out for. And, of course, the fact that we do not have a trade deal. We've been poo-pooing that idea that there's a trade deal out there. I can't believe I lost this chart. It must have been another article. All right. I don't want to waste your time. It's not here. I was looking at another chart on another article. All right. So anyway, a lot of complacency in this market. The advanced decline line, not as strong as what should be. The VIX not as strong as what should be. When you take a look at the metals, the industrial metals, which were beginning to shape up somewhat, like with copper, copper is now rolling over, lower highs and lower lows on the Stokes. Bearish key reversal bar yesterday. We'll take a look at the pre-market activity on copper, but it's rolling over. And I mentioned earlier the consumer discretionary names. Let's go to a weekly chart. And we have taken out the lows of the prior week. And overlaid here, I have the S&P 500 in blue in line chart. In candlestick, I have the XLY, the consumer discretionaries. And you can see that we have a clear and defined divergence. And why does this matter? It matters because, remember, it's the consumer, not business, not the banks, nobody else but the consumer that is driving spending in this economy. And when you have the discretionary names, when you have people that are no longer willing to spend $4 or $5 on a cafe latte over at Starbucks, you have a problem. Speaking of Starbucks, Starbucks not looking good here. Talk about your divergence. This is the mother of all discretionary names. So Starbucks not looking good. XLY looking weak. It hasn't broken yet. I wouldn't go shorting it, but it's not looking good. Now we do have a couple of symbols in the forum I want to go over. PPTL. And then we're going to talk about strategy. We'll go into the pre-market activity and we'll talk about strategy with, there's not much data here. PPTL, premium. Do I have the right chart? No, it can't be right. I think this is platinum spot. I'll go over platinum spot. Yeah, that symbol's not working for me. This can't be. I'll go over PPTL on the futures. Let's go over another one that was out here. Norris, UGAZ. All right, UGAZ, I don't want to touch natural gas right now. For whatever reason, it's taking it on the chin this week. Very, very hard. Let's go to a daily chart right now. Begin there. And you can see that we rallied up and into an upper band of resistance last week, flashed a bearish reversal bar on the week, and we gapped down this week. Price action is not sexy. Now, we do have a bit of support, which we closed below. We're currently trading below support on a weekly basis. 16.07 is the number to watch. And if we close down below this support level here, I'm looking for a pullback to a 12 handle on the UGAZ. I would avoid at current. In fact, if it pulls back to that support level, I would look to trade off of that level. All right. Until then, until it hits support, Norris, I would be a bystander here. I wouldn't get involved. I wouldn't even sell puts. You're not going to. Well, you can't sell puts on UGAZ. GASL, GASL, you can't sell puts on. So I wouldn't do anything here but watch. Let's go to a daily chart, see if there's anything happening here. No. We have a bearish reversal bar yesterday. Not only a bearish reversal bar on nat gas, we have an outside day. I would avoid UGAZ like the plague at current. Let's go to the pre-market activity and we'll take a look at UGAZ. Since we're leaving off here with UGAZ, we'll take a look at it on a pre-market basis. All right. Obviously, UGAZ is not currently liquid in the pre-market. We'll go to nat gas. As they trade in tandem. All right, natural gas is down again this morning by about just shy of a half percentage point. And this is a 4-hour chart. These will all be 4-hour charts. Not a good session. I think we move lower here, especially if we break this support level in red. Here at the let's call it 2.60 level. We closed down below that level, going a lot lower. So I would avoid natural gas. Sticking with the commodity trade for a moment. I spoke about strategy earlier. We are long of the gold miners. We added more to silver yesterday based upon the daily charts and the fact that we had hit support levels. NUGT, of which we are long of. We've been selling covered calls. A couple of members have been selling covered calls this week. I have not. I haven't sold them yet. I was looking for a rally on NUGT. I think we should get that this morning. Gold is rallying, and we'll probably put an advanced order out there trying to sell covered calls at a later date. Until now, during this correction, what we've been doing, the strategy has been, is to generate premium, generate income by selling just out of the money. Yeah, Jay, you're right. I'm going to go to that chart in a moment. Gold is up. By selling just out of the money covered calls on NUGT and expiring on a weekly basis. So generating income, lightening up when necessary on the position. Now we're beginning to find a footing on NUGT, especially on gold at current. And now what I want to do is I don't want to stay too short term on the time frame, meaning I don't want to stay just out of the money and with options expiring on a weekly basis. Some members are, and they're splitting it up. They're selling just out of the money covered calls expiring this week and thinking about selling longer dated covered calls. That's fine. I'm good with that. I'm looking now to sell premium expiring the first week of December up at the low 30s on NUGT because I think we're probably going to move higher. So let's go to a chart of gold this morning. And gold is moving up higher today. We are off the session highs, but a real pretty breakout here. We're up just over 0.75 of a percentage point on the session. Now, we do have Jay Powell coming out later this morning, and we do have the inflation data coming out at 8:30 a.m. Eastern Standard Time. So that could influence gold one way or the other. I'm not sure which way it's going to go. But if you see inflation come out very hot, in the short term, that'll be a negative for gold because the knee-jerk reaction is going to be to sell gold. If it comes out as expected or tame, I would expect to see the rally to continue. Now, again, we are rallying this morning. We'll be looking to sell covered calls on our gold mining position. Members, stay tuned for an alert. But the chart is looking good, especially relative to what we've been seeing these past several days, which has been a rough one. Here was our breakout. Again, this is a 4-hour chart, so we're staying very short term. Members, we went over yesterday the daily chart of gold and NUGT. So check market wrap from last night. So we broke out. We could quite very well pull back and retest this breakout point today. So while I'm bullish on gold, it's up this morning. I wouldn't go chasing it. We might very well just get a pullback and a retest of the breakout point. Moving on to silver. Silver up very, very strong this morning. Wow. We're up over a percentage point, nearly 1.25% on the session. So you're seeing risk off this morning, money floating into commodities, moving out of stocks. Before we go to stocks, let's take a look at the US dollar. Now the dollar rallied overnight and flashed a reversal bar here. We've pulled back. We're again retesting support. Now, this 4-hour bar is now 21 minutes old. It doesn't close until 9 a.m. Hey, Sam. It doesn't close until 9 a.m. Eastern Standard Time, so a lot can happen here. I'll be watching to see whether or not the dollar breaks. But if there's fear in the global economy, then you could see gold, silver, and the dollar rally together because the dollar is still perceived as a safe haven. But what I will be watching for is a pullback in yields to validate the correlation between gold and the U.S. dollar. Where are my yields? Oh, not yields, bond prices, not yields. Let's go to, let's bring up the 10-year bond price. That's wrong. There we go. Okay, so now it makes sense. So we have broken out on the 10-year bond price. That means that your bond price is moving higher, yields moving lower. Yields have had a tremendous move over these past couple of weeks. Now they're beginning to come under pressure. That move higher on yields, despite the fact the Federal Reserve has been in the bond market, they haven't been buying longer dated maturities. They've been buying short dated maturities. That's allowed the market to reprice the 10-year, the 30-year, the 5-year bond, and that's put pressure on the price of gold and silver because everybody believes, oh, there's going to be a trade deal, phase one, yada, yada, yada. We're going to hear this crap for a while. Forget it. It's not happening. So bond prices have broken out. Great base here. We're moving higher. That's why you're seeing the dollar rally along with gold. If you saw weakness on bonds and the dollar rally, you probably see gold pull back along with silver. Moving on to stocks. Sam, Euro US dollar has almost completed a double top. Yo, Bob. Hey, Sam. Good morning. Euro US dollar. Let's take a look at it. Oh, I wanted to go over platinum too. Let's go over platinum that I'm looking at so I don't go searching for it later. And we'll go to Euro US dollar, then we'll go to the stocks, stock market futures, and we'll leave off there. Where am I at here? I do have a 4-hour chart. Let's pull back. What a nightmare. Platinum really took it on the chin. So what I'm looking for here, with all this devastation, I'm looking for opportunity. Let's go to a weekly chart, see where we have historical support below. Not much happening here in terms of historical support until we get down here. That's a long way away. 544 the ounce. So we've broken trend. We have a lower high on platinum. We need to see a rally here in the very, very short term. And I think that's probably what's going to happen. What we need to see and it looks as though we are currently trading above this prior low. We can't take out on a weekly basis this prior low. If we close down below it, it spells a lot of problems for platinum. All right, so here you have it. Here's the line in the sand. Here's our prior low going back to the week of September the 30th. And we are trading currently above it. We can't close down below this level. If we make a new weekly low where I long a platinum, I would sell my position. I would get out because we're going a lot lower. Currently, we're defending the support level. We are up on the session. So we need to close out the week above prior support here. And that was what was the low? 875 spot 6. We're currently at, last tick was 877 spot 1. So platinum, a little bit of hope here for it to close above support. I wouldn't go adding until Friday afternoon to see how we close out the week. Moving on to Euro US dollar. This is another weekly chart just to get that higher level view. All right, so Euro US dollar has a double top. Using what time frame on the charts, Sam? Let's clean this up. Oh, 4 hour. Okay, okay. That makes sense now. So we go with the weekly chart. This is complete OCD on my part. I need to take a look at the higher level view first before I talk about daily or 4 hour charts, just to get a feel for where we were at historically. All right. So it looks like we're flirting with a potential breakout here. Obviously, the trend is still to the downside, Euro US dollar. Now, if we see a breakout on Euro versus the US dollar, you're going to see gold, silver, oil rip through the ceiling. And those who are new to technical analysis and trading, the reason why, these commodities are traded in US dollars. They're denominated in US dollars. Daily chart. So yeah, we've seen some weakness on the euro. But on a daily basis, what we're seeing is a bullish reversal bar at current on the euro versus the US dollar. And here is our upper band of resistance. Watch for a close above it. Remember that Mario Draghi is no longer the ECB chair. Now, Christine Lagarde, I believe, is. Now, how much better she's going to be, I have no idea. If she's going to be more dovish, hawkish, probably more dovish or equally as dovish. But just keep an eye that you have a new chair at the ECB, and that may put a bid under the euro. Now, 4 hour chart, yeah, we have a double top. but it's already played out, right? So we've had here's our double top. I'm assuming that's what you're referencing, Sam. Here's our double top. Here's our break of support, and we're pulling back. Now, what we're looking for is a rally to close above this upper band of resistance. If we get that, you're going to see a bid put under the dollar, under gold and silver, because the dollar is going to come under pressure. Let's take a look now. I purposely delayed going over the stock market futures. Okay, cool. We're on the same page, Sam. Oil, weak this morning. Now let's go to the stock market futures, because I've been waiting for them to rally back, and they have rallied back a bit. Okay. All right, so the lows of the session on the S&Ps were at 30.75.75. Watch for a close below that level. If we get it, it spells trouble for this market, because that'll mark a breakdown on the S&P 500. And remember, there's a lot of complacency out there. And market breadth is not wonderful. And you had the VIX break out. Now, while we still have the catalyst to the upside being manipulation in advance of the elections, helping the market churn higher for all the wrong reasons, we could still have an event that could take the market down, and take it down dramatically in a very short period of time. And you can see we're beginning to weaken up here yet again on, this is a 30-minute chart on the S&Ps. Moving on to the Russell, which was really weak earlier. I want to see if we recovered. I purposely delayed going over these. Wow, we broke down. All right. So the Russell 2000 has some real serious problems here. We broke down this last 4-hour bar. This bar, we've attempted to rally back, and we are failing to do so. It's still early. A lot can happen. By 9 a.m., perhaps we'll be trading back above the support level. We don't care where the bar is trading at current. What we care about is where it closes, right? So we've attempted to rally back. We've been rejected so far. So on a 4-hour basis, the Russell is looking weak. And we do have lower highs and now lower lows. A warning flag is on the track for the Russell 2000, and for that matter, the entire market. The NASDAQ, it as well has broken down. Here was our lower band of support. We broke it this last 4-hour bar. Now we're attempting to rally back. Let's see whether or not we take out the lows of the morning, or by 9 a.m. Eastern Standard Time, are we back above the support level? We'll keep an open mind. Taking a look at the RSI, it is not looking good. RSI has been breaking down for several bars now. So the RSI broke down in advance of price. So we have we had a bearish divergence on the NASDAQ, and we are currently down over a 0.5 percentage point on the NASDAQ. Be careful this morning, folks. And we'll watch and see how we close out the day. Sam, well, Trump just said Eurozone is worse than China, so tariffs fears up. Yeah. I believe he said he was going to, I did hear him say that. I think he kicked that can down the road with regard to tariffs, though. Correct me if I'm wrong. Something may have changed. You never know with POTUS. So, but I think he's going to postpone those tariffs. I don't think he wants to rock the boat in advance of the elections. I could be wrong. You know, he's very, very volatile. So I am very fearful of predicting what the president's going to do one day to the next. So he said he was going to kick the can down the road. Let's see what happens. If he invokes those tariffs, That means a lot of problems out there for this market. All right, and with that, I think that is it for this morning, folks. It's 5:35 in the a.m. Folks, long story short, we're seeing some problems here with the market. We are seeing weakness on NASDAQ, on the Russell 2000. You're seeing some negative divergences on a daily basis with consumer discretionary names, which ideally you'd like to see rally and lead the market. They're not. Names like Starbucks weakening up here. A lot of greed, a lot of bullish sentiment out there, and that does not bode well for the market. You like to see the markets climb a wall of worry. There's not much worry out there. I'm worried, but that doesn't matter really. I really don't matter. So be careful, please. And if you haven't already given a like to the YouTube video, if you haven't given a like to this video, please do so if you could, and subscribe to the channel. And everybody have a great remainder of your day, and I will talk to you soon. Be well.